U.S. Quality ETF Portfolio Manager. Tom, are you wading into the whole chip thing here? Is now Marvell's the hot new thing. Where are you at for next year?
Yeah, well, we like a lot of these companies from a quality of business point of view. I think if you're asking me Broadcom versus NVIDIA, we would come down on the side of Broadcom here in terms of potential opportunity. One of the reasons why Broadcom is gaining some ground on NVIDIA is they are winning on the networking side. As you scale up the number of GPUs in a data center, it becomes an N squared versus N problem to connect them all together, and that's where Broadcom and to a lesser extent Marvell play. And also Broadcom is strong in the custom chips. So for the big hyperscalers like Meta, and Alphabet coming up with the chips that they need to do their specific workloads, we see that as being a much more proven commercializable use case and one that's gaining a little bit of share. So NVIDIA is a great company, but I think Broadcom has a little bit of more tailwinds behind it. And that's setting aside some of its businesses outside of AI that are a little bit of in a cyclical trough that we think can rebound next year.
You say, Tom, that the NASDAQ has turned into an AI index. Is that a compliment or an insult?
Well, time will tell, I suppose. But what that's saying is it's become not really an index. It's become a single bet. So it's a very risky thing to invest in. It's not what I think you would want from a sort of diversified investor. It's probably going to give you more volatile returns next year, and I'd a little bit worried that the AI rally has extended itself, so those may be uncomfortably volatile returns.
But maybe I feel a little bit more comfortable in investing in a broad AI index when I can see this leadership churn. Maybe the leadership is transitioning from NVIDIA to Broadcom, to whatever the next iteration will look like. Isn't that better than if this bet only had two companies, and if the thing doesn't work out, well, then we're all, forget it. But if it's maturing, and if it's now potentially going to offer a lot of different companies customizability, plays out across the software space, I mean, don't you want exposure to like the most innovative, fastest growing part of the broad market and economy?
Oh, you absolutely do. And I think you shouldn't just own Broadcom or just own NVIDIA. And I think for AI, it's great to play it through some of the more downstream companies or even a company like Apple that, of course, is a big weight in the NASDAQ. But I also think you should pay attention to some of the old economy stocks out there. I think you should pay attention to investing outside the U.S., for that matter, areas that have lagged, but where there's still, we'd say, long-term pretty good growth. And AI, because it's become such a, let's say, hype trade at this point, not to say that's not real, but any little hiccup in the economy and these stocks can fall pretty hard.
Although if Taiwan Semi is the example of investing outside the U.S., we're kind of right back where we started from in terms of themes.
Yeah. Well, it's certainly, I said, you want to invest in AI, and TSMC is a great way to do it. They make all of NVIDIA's AI chips. They make all of Broadcom's AI chips. The broad end of the funnel all goes down through TSMC, and even more so now that Intel is falling behind and had to have their CEO changed. So they're perhaps the most essential company in the world. That's one of the reasons to invest outside the U.S. is not just diversification. You get great businesses like TSMC out there. But on the other hand, TSMC is not, all there is out there too. And so that's, if you want to diversify outside of tech, the U.S. market has become so tech heavy, and that's a good thing, of course, but it's not as diversified as global investing.
Let's hop right in with Drew Pettit. He is U.S. equity strategist at Citi Research. Drew, good to have you on. What are some of the macro themes that you and Citigroup are telling your clients about for next year?
So a couple things. First off, on the growth side, we think the AI story is real. I appreciate what Bob's covering here, but honestly, AI productivity gains, high-level fundamentals look really good for the S&P 500. I think that helps us get through some of the more volatile periods. But at the same time, inflation, not quite gone yet. And then when you think of the valuation setup, a lot of good news is priced in.
Okay, so there's actually a lot to unpack there. Some of the good news priced in, but you're optimistic about some of the AI themes. Now, the market obviously, Drew, very optimistic about AI for the last, year plus. What will continue or what might change in 25?
So it's funny. I think the fundamental stories, at least for the picks and shovels names, they continue. But where we think the trade is actually going to broaden out, and honestly it has since mid-year, is into some of the users of AI So think about car companies that do autonomous driving, software companies putting that into their programs themselves, and even to some of the more cyclical names that on the back end can get some more productivity gains. So yes, the picks and shovels, the enablers of the trade were attractive for the most part in 2024. We think AI continues to broaden out into the year ahead.
I don't want to be negative about it because it's been unbelievable and it may change the world. Who knows? But I'm getting old, and so I look back at history and I think, okay, we built fiber optic cables, and anybody remember the global crossings of the world? They spent a lot of money, did a lot of good, but they went bankrupt in the process. Not everybody's going to win, Drew. There's no way that all of these companies that we talk about every single day, that they're all going to win.
And it's funny.